All right, what is happening, my friends? Happy Friday. Welcome back to another Dividend Happy Hour. Man, what a crazy way to close out the week. Before we go any further, guys, I do want to know, I'm curious. Let's see who had the biggest gain in their portfolio today. You guys drop in the live chat. How much were you up today? And also with that, let me know what was your best performing stock for the day. I'm curious to know. And while you guys are throwing that in the chat, thank you guys for tuning in. I hope everyone had a great week. I've got a feeling, guys, got a pretty strong feeling this is going to be a good stream. Episode 129 of the Dividend Happy Hour. I was looking forward to this one today. So with that, I'm really excited to hang out with you guys for this next hour or so and see where this stream grows. See where this stream goes. Let's see. I'm waiting for you guys to throw your portfolio numbers in the chat. Okay, we've got TAC up 1.57%, really solid gain. Top stock is ASML, nice, good stuff. We've got Christian up 1.2%. Best was NDQ. There you go. Let's see who else we got. Salvatore was up 2%. That one's the winner so far. Good job. That's pretty crazy. I'll show you guys my portfolio in just a minute. I want to see what else you guys have going on. Fast Eddie's Brookshire Hathaway. That's funny. Evolution, well, Rich is up 1.4% here. B Wayne's up over 1K for the day. Good job. That's crazy. Gorilla's up 1.2%. Top stock was Pepsi. Okay. We got Joey up 1.2% with Morgan Stanley as the top performer. There you go. Nice. Kev's up 1.19% with NVIDIA. That's crazy, Chris. NVIDIA's up 4% for the day. There you go. Ooh, Salvatore sold some AbbVie today. Yeah, maybe not a. I mean, AbbVie, I think will continue to grow at least financially, and so I would think the share price should continue to grow as well. But now's not a bad time to lock in some gains. It's definitely been looking pretty frothy. I think it's 205, 206, so not a bad move. Not a bad move. We got Teeps up at 1.25%. And by the way, man, I saw your email earlier today. I'm so sorry I haven't gotten the chance to send you a response or send you a text. I'll text you. I'll send you a text tonight or something. And thank you for reaching out. But yeah, I'll text you. Sorry for leaving you hanging. Who else we got? Dean, Lean Mean Dean Machine's up 1.2% with RTX being the top. There you go. Ooh, Tommy's up 1.5%. Best was Texas Roadhouse. That's awesome. OKE up 3.7%. There you go. Nice. Let me show you guys where I'm at. It looks like who had the 2% gain for the day? Yeah, Jordan up 1.5%. Dividend Cowboy up 1%. Wonder Rider's up 1.37%. Nice. I'm right there with you, Wonder Rider. I'll show you guys the port in just a sec. Who had the 2% gain? Salvatore. Salvatore had the 2% gain. So, man, I think you are the top dog for the day. Nice. Kaysen's up 1.17%. There you go. Alex up 0.92%. Oh, Striper Kid coming in. Salvatore knocking you into the number 2 spot with a 2.15% gain. Oh, but it dropped more earlier this week. Okay, yeah. Sir Dude Bro Man up almost 1% in the taxable, up over 1% in the Roth. There you go. Andrew's up 1.5%. Nice. Nice. With Main Street saw a really nice gain. So let's jump over to the spreadsheet, guys. This is my dividend portfolio tracking spreadsheet. And as all of you guys probably already know, you can download a link, download the spreadsheet. There's a link to it in the description of the video. Start using it for free. But here's where we're at today. This is my combined portfolios. We've got the taxable and the Roth. So both of these combined, I was up 1.36%. And they're actually pretty neck and neck if we look at them individually. The taxable was up 1.35%. And is almost less than 1K away from being an 80K. And then the Roth was up 1.37%. And I think a lot of that was the S&P, which was up 1.5%. So that was good. SHD did pretty well too, up 1.3%. And then as far as my individual positions go, Clear Secure actually was the top dog for the day, up 5%. And I actually added 2 more shares like right as the market opened, before all of this craziness. I picked up 2 more shares. And I think I'm going to start buying a little more Clear Secure now. I listened to their earnings call, feel really good about everything going on. And I think I don't know how many more shares I'll buy, but I think for now I'll probably start dollar cost averaging into that a little bit more. So there's really nothing else in the portfolio that I'm super interested in buying at the moment. I just recently picked up a ton more Vici, bought like 12 shares or 15 shares earlier this week. So I feel like I'm pretty good with Vici for now. And by the way, while we're here, guys, for those of you who already use this spreadsheet, you'll notice, if you haven't already, that the annual dividend column is on the fritz. This randomly happens from time to time. I always get emails about it, but if this is happening to you, if you're noticing this in your spreadsheet, it will work itself out. This randomly happens from time to time, and it usually takes a day or a couple days to get back to normal. But everything's still working. It's some sort of miscommunication between Google and FinViz, which provides that information here on the spreadsheet. But anyway, guys, that's what's happening in my portfolio. What else we got here? Yeah, Vasco was up 1.15%. Nice. We've got a couple interesting questions here, I think, and I think I've seen some already in the chat. There was one from Salvatore that I wanted to save about selling full positions. We'll circle back to that one. We got Alex here asking about Google. We'll take a look at Google because I probably should pay it a visit. I know it's down quite a bit in the last month. So, but anyway, guys, I know we've kind of been going off on a tangent so far in the stream. Let's get to our cheers. Ooh, listen to that, guys. It is fresco clock, my friends. My favorite time of the day. Guys, what are we toasting to? Here's to you guys. Thank you for tuning in to another really fun Dividend Happy Hour, episode 129. I can't believe we've almost done 130 of these things. I think I've been doing this live stream now it's been over 2 years, right? I guess it's been closer to 2.5 years. So I remember I started it at my back when I was living in Sacramento. Started it right there at just my kitchen counter. That was the only place I could film this thing. No camera or nothing. It was just my laptop camera. So we've come a long way with this stream. But anyway, here's to you guys. Thank you for putting up with me for all of these, all 129 of these. I hope you guys enjoy doing this as much as I do, because it's something that I sincerely look forward to every week. So here's to you, and here's to the dividends, the pursuit of that sweet cash flow. Because at the end of the day, that's really why we're all here, right? That's really what's bringing us together. But nonetheless, cheers. Oh, hold on, guys. Wow. Oh my gosh. So good. Yeah. Love Fresca. Let's see. Let's see, guys. Oh yeah, I got to Joey's got a question about the watch. We'll come back to that. See a question about options. Sorry, I'm just scrolling through the chat, saving some questions for us to go through. So, guys, we got to get to those questions. Number one, there's 4 of them that we got to get to every week. Since we didn't start with this, now I'm all out of commission. I'm all out of order with this. But guys, number one, I want to know, which stocks did you buy this week? What did you add to your portfolio? Let me know that in the chat. Like I told you guys a couple minutes ago, I picked up Vici. I picked up some Clear Secure. So pretty good week of buying over here. Number one. Number two, what are you sipping on? What did you bring to drink to tonight's Dividend Happy Hour? Let me know that in the chat. Number three, I think a lot of us are probably sitting at all-time highs in our portfolios. And inside of your portfolio or outside of your portfolio, just general stuff. Did anything cool happen to you guys this week? It was a pretty good week over here, but yeah, I want to hear about your guys this week. Anything cool happen, whether in your portfolio or outside, that you feel like sharing? Drop that in the chat as well. And number 4, I want to know if we have any first timers here in the Dividend Happy Hour. In case we do, welcome aboard. Stoked to have you tuning in live. In case this is your first time, we do this live stream pretty much every single week. It's supposed to be like a regular weekly thing. Sometimes I'm out of town or can't make it or have to reschedule. But on a normal week, we're doing it on Friday night, 5 p.m. Pacific time, 8 p.m. Eastern time, rain or shine. And if this is your first time, I hope you enjoy this one and come back to all the future happy hours. Oh, cool. Looks like it's Milo's first time here. Nice. Very cool. Well, welcome. Hope you enjoy this one. Let's see. What are the buys looking like? What are the buys looking like here? Ooh, Chris is sipping a Rise Sour Punch Blue Raspberry. I like those Rises. Those are good. Kaysen said offloaded STCE after 6 months of loss, moved it into dividend payers. Okay, nice. Not a bad bunch there. EPD's on there. Actually, right before we went live, I got an email from EPD saying that the K1s for the year are ready. So that was super easy to download. And that's one thing about the MLPs, these master limited partnerships, like enterprise products partners, that a lot of people don't really care for. The fact that you have a whole separate tax form in addition to your 1091 for all of your other holdings. But truth be told, I've never had an issue dealing with the K1s. It's always been a very simple, straightforward process for me. So I don't know. That's just my own personal experience. But I guess I understand why some people would be turned off by that extra form, but it doesn't scare me. Let's see. Paolo added KHC. That's Kraft Heinz. Nice. I see some SCHD and Stag from David and RFI. There you go. Good and PCG. Okay. Drinking some sake. Okay. Salvatore's got another good question about selling positions. We'll circle back to that one. Chris with the usual suspects. Man, this is just your weekly rotation. Nice. William drinking something I've never heard of before and also picked up some Realty Income. I think that's a drink, unless that's another stock. Either way, I've never heard of it. Let's see what else we got here. Vasco. There you go. On a healthcare kick, it sounds like. 12 shares of Pfizer to join Johnson & Johnson and Merck. Merck's looking like an interesting buy right now. I'll be talking about that one a little bit in my video going out tomorrow. Nice. Mr. J added ADP. Nice move. Good company. Good company. Christian looks like dollar cost average into, okay, basically the NASDAQ, the Australian markets version of the NASDAQ 100. There you go. Sam with a few solid pickups there. Cool. Salvatore, SOUN. Don't know that I'm super familiar with that one. I think I've heard of it. We've probably looked at it before, but it's not a ticker I'm super familiar with. Oh, Peter, man, this is dedication. First time live. It is 2:11 in the morning where I live. Well, man, thank you so much for tuning in. I hope it's worth staying up late for. There we go. Jose's first time live too. Usually catches it on the weekends. Jose, I'm happy to see you in here, my friend. Jose, you saw my you probably saw the Instagram story, huh? Did you come over from Instagram? Do I have that right? Fast Eddie with SCHD and AMD. There you go. Very nice. Jordan with a Google pickup. Oh, and some Main Street. Fastenal, Merck, and UNH. All good ones. Clayton's first time in the stream. Welcome, Clayton. Oh, Keith as well. Man, we got a lot of first timers here in the stream. Welcome, guys. That's awesome. Let's see. Janice with QQQY sipping on some agua. Good stuff. There we go. Kaysen's kind of first time too. That's awesome. Nice. Evolution. Or Rich is back in the green with 3M. Nice. Good stuff. Ooh, Alex with a big Pepsi pickup. There you go. Ooh, and a pistachio cream ale. That sounds delicious. Let's see. Let's keep going. And I'm just going to continue scrolling down here in the chat, guys. And oh, Trista's got a good question. I'm going to see some. Sorry, guys. I'm totally like tripping over my words. I'm just scrolling down in the chat, seeing what questions we have, because it's about time. We got about 45 minutes. We'll start going through these questions. I've got 7 saved so far, so I apologize if I skip over some of your guys' buys. Pot Roast asking about Disney. I think I saved. Someone else asked me about Disney earlier. Maybe that was you. I'll save that one here. Okay, so let's see here. All right, guys. So I've got 8 questions saved so far. I think 2 of them are from Salvatore. Um, okay, cool. Let's start going through some of these questions, guys. So this first one from Salvatore, do you ever sell full positions that have topped out? Oh, the second question is the same one that I have too from you. Okay, but do you ever sell full positions that have topped out to redeploy elsewhere? Let's see. Sell full positions to redeploy elsewhere. I don't typically sell. I can't think of an instance where I've sold a stock just because it's gotten up to a certain share price. Um, typically I'm a buy and hold kind of guy. Even if a stock, like I'm looking at AbbVie right now, that one's really seen a crazy run up. And even though it's a relatively small position in my portfolio, I've thought about selling out of it before just because it's a small position. But at the same time, I think, that money right now is sitting in a pretty solid company. I think that company will continue to grow. And so I'm just going to leave. Oh, and as I'm looking at this, guys, my total return with AbbVie is officially over 100%. That's the only other company in my portfolio besides Williams Sonoma that I can say that about. That's crazy. Really cool to see that. So no, I guess generally speaking, if a stock's doing well, if it's seeing some nice gains, typically there's a reason for that. And especially if those gains have happened consistently over a long period of time or an extended period of time, like has been the case with AbbVie. And I'll just hold on to it. Clearly something's working with that. And yeah, I don't see if the business is just going to continue to grow intrinsically. I don't really see the point in selling it and redeploying elsewhere, if that makes sense. Hopefully that makes sense. And what do you guys think too? I think that's an interesting question for you guys. Do you feel the same way, or do you sell positions if they reach a certain percentage gain or anything like that in your portfolio? I'm curious to know. Quick comment from Jason here on JEPQ. Truth be told, I don't have anything against JEPQ. I don't personally own any covered call ETFs, and I guess never say never with them. I think there's a lot of bad ones out there, so I think there's a lot of bad funds that give covered call ETFs a bad rap in my mind. But I do think that ones like JEPI and JEPQ are an exception to that. I think those have been pretty solid funds. I used to own JEPI for a little bit of time, and it was good to me. And maybe someday down the road, um, I could see myself buying back into something like that, maybe potentially. But we'll see where things are at. I really don't have anything against JEPQ. For someone who needs that income right now. But I don't know. I also, because the payments are fluctuating, I don't know that I would put a whole lot of eggs in that basket if I was someone who was in retirement or close to it. So just because you never know. You never know what can happen with those. And with that said, too, sticking to this conversation, um, those funds have only been around for a handful of years now at this point. I think JEPI came out. I don't remember when JEPQ came out, maybe around the same time. But I think JEPI was back in like October 2020 or something along those lines. So they really haven't been around. They've been around for a few years, but really not all too long. So it'll be interesting to see how those funds shake out in the coming years, after they get 10 years, 15 years under their belt. I think it'll be easier to make a more solid judgment about them with more time. Okay, so Dylan says sell the losers and keep the winners. Trista says I only sold because I was losing money. There you go. Okay, guys, so let's jump over to this next question. This one comes from Alex, who says, how do you feel about Google now after a good pullback? So let's take a look at Google. Financially, I already know we're going to see a very pristine looking company. But let's check out where the valuation's at. So going over here to Snapstock, guys, which you can get access to when you become a member of the investment club. And there's a link to that in the description if you want to learn more about it. With that, you also get access to all my stock research, all my book notes, tons of other writing. So definitely check that out. Kind of interesting. And like I said, you also get access to this platform here. So Right off the bat, I'm seeing that Google's still up about 30% in the last year. So even though it has seen a recent decline, it's down 17% in the last month. Um, it still has room to come down, and we can certainly see that too if we look at this 52-week range. It's not terrible, but I do think that it has room to continue coming down. The free cash flow yield still looks like it's about 11% below the 5-year average. The price to free cash flow is a bit above the 5-year average, but then these earnings metrics, the PE ratio and the earnings yield are, looking more favorable compared to their 5-year averages. So there is that. Um, so with that said, I mean, as far as valuation goes, it could be worse, but I don't know. I actually I don't even know why Google has come down. I really haven't been keeping tabs on it. Obviously, it's a beast of a company. I mean, this just looks so great. This really is a work of art. Um, yeah, pretty high margins. Kind of gross margins seem to kind of dip, and they're coming back up. Steady net income margins and free cash flow margins, so that's good. I think Google has all the makings to be a great dividend growth stock. Um, Yeah, still really solid returns on invested capital. So, I think if you were in a position where you could hold on to this stock for a number of years, you're going to be fine buying at today's prices, especially if you're dollar cost averaging into it. Because I don't know what the share price is going to do from here. Obviously, maybe it'll rebound back up. Things have just been so flippant lately. Nothing would surprise me. But like I said, I don't think it'll be the end of the world if you started buying it at current prices. Beast of a company. I know that much. So. What else we got here? Let's see. Let's go back over here to Joey. This is a quick one. Give me a look at that watch. Okay. Okay, so this one is my Bolova Marine Star, excuse me. This was actually my uncle's watch, and he got this for his 30-year to commemorate working at Chevron for 30 years. So he got this on his 30-year anniversary working with the company back in March of 2000. So basically 25 years ago, which is crazy. And the cool thing about this watch, I mean, in addition to it just being kind of like a, family heirloom, I suppose, it's got this little chevron thing right here, the Chevron logo, and then you've got six little stones in there. So anyway, kind of a cool watch. And I just think it's a very, very timeless looking watch too, which is one of my favorite things about it. So yes, two-tone. We've got steel, we've got some like gold looking, but it's not real. It's not real gold. Definitely not. Really, this was probably I bet this watch brand new was no more than like a couple hundred or a few $100s. And it's like, I don't know if you can hear the jingle jangle of the strap, but it's not like it's kind of a cheapy strap too. So overall, the watch is not super expensive watch. This is a good brand though, pretty iconic brand, Bulova. Very classic American watch company. But anyway, guys, let's go over here to this next one from RC King. Are you selling options? I do real well on. I think he means Iron Mountain. What's IWM? Maybe it's IWM. I don't know. But anyway, no, I don't sell any options. I'm moderately familiar with how they work. I feel like I get asked this all the time, and maybe I'm just weird, but I don't have any interest in trading options. I'm totally fine just going long on my positions and not adding that extra maintenance, extra work that goes into trading options. And anyway, and not that it's even a huge time suck or anything, but the things that go into doing options, I'm just not interested in doing. And I'm not in a rush to make the extra income from options. I know you can make a lot of great income from doing so. My friend Wayne, shout out Wayne, he crushes it with options. And I'd be lying if I said there weren't times where I was tempted to start, doing covered calls and stuff like that. But At the end of the day, it's just not something I'm interested in, at least not at this point, maybe in the future. We're going through these questions pretty quick. Okay, we've got 3 more here. So this next one's from Trista. Can you explain the difference between dividends and capital gains? I have FSELX, and it pays capital gains versus a dividend. So maybe it does. I don't know if it does both, but so FSELX is going to be a mutual fund. And if you get a capital gains distribution, what that means is that within the fund, they sold out of a holding or some holdings for a profit, and that profit is paid out to you basically kind of like it's basically kind of like it's a dividend, but it's just a capital gains distribution from selling holdings within the fund, as opposed to receiving a dividend from the fund, which would have come from, the companies within the fund paying a dividend and then you receiving that paycheck. So hopefully that explains the difference there. Let's see. So Christian here now wants to know, will you sell anything in retirement and or keep moving between single stocks in those years? Well, I have a long time until I need to figure that out. But if I'm understanding your question correctly, I would imagine my portfolio would look relatively similar in structure to how it does now, where I have, a certain allocation to ETFs, probably larger allocation to ETFs than I do today, but also still have some individual holdings. And as far as, selling out of stocks versus not selling out of stocks and just collecting some passive income, I think that's TBD. I think we're going to have to see how things shake up over the next, probably 10, 15, 20 years. And if there are positions where it just doesn't seem like they're going to cut it on the cash flow side of things, then I'll probably have to sell them and redeploy that into higher yielding investments. But we'll see. We'll see what happens, Hopefully that answers your question. I hope I approached it the right way. Ooh, Pot Roast now wants to know, what are your thoughts on Disney? I don't know that I have any serious opinions about Disney, but let's take a look. They because it's been a while since I looked at Disney. So they started paying a dividend again, if I remember correctly. I want to see if there's any news on that. I'm pretty sure they started paying a dividend again already. So I do like that. Obviously, they've got some pretty iconic media, pretty iconic IP. Where's that dividend? I know I'm about 95% sure they announced they'd be paying a dividend again. And yeah, there we go. Hikes annual cash dividend by 33%. So that's pretty solid. They definitely came back with a bang there. So, but let's look at some of the financials and the valuation as well, because I can't tell you how long it's been since I've looked at Disney. So pretty flat in the last month, barely up year to date, up 1% in the last year. I will say the free cash flow yield's not terrible at 4%. Pretty high PE ratio, 37%, but this is quite a bit below the 5-year average. So that's interesting. And I'm guessing the reason for that, like in these years, the free cash flow took a hit, which is why we saw the price to free cash flow so high. Yeah, exactly. So revenue growth has been very strong. Earnings per share took a big hit. Same with the free cash flow per share. But that's recovering. That looks like that's recovering stronger than the earnings per share. 462, 469. Where's this dividend at right now? So the dividend looks to be very well covered as well. Debt doesn't look too terrible. Net debt to free cash flows, less than 5 in 2024. Interest coverage is right about where we'd like to see it. Yeah, generally speaking, it just seems like this company went through a few rough years financially, but is kind of clawing their way out of that. So that's good to see. I'd be hard pressed to believe that Disney's going to be going anywhere anytime soon. I imagine we'll see some pretty solid returns. Actually, no. Not really, right? I'm actually surprised to see this. I would have thought that their returns on invested capital, even prior to 2020, would have been better than they are. Returns on equity look pretty nice prior to 2020. But yeah, I would say that this is a bit low. How does it compare to something like Comcast? And I know there's maybe slightly different, but I think that there's a lot of symmetry between these two companies. Comcast financially looks a bit more consistent than what we saw with Disney. Um, Interest coverage is a bit lower than what we saw with Disney. Net debt to free cash flow is a bit higher. Obviously, the dividend growth has been more consistent. Nice valuation right now too. That yield is way above the average. This is something with Comcast though. It looks like the dividend growth has slowed down very consistently over the years, while simultaneously the free cash flow payout ratio has kind of increased. It's not bad though. It's still less than 40%. But yeah, I guess their returns aren't that great either. Return on equity is a lot better. What we saw with Disney, return on invested capital, kind of similar. So I don't know. I guess with Disney, there's some good, there's some bad. I don't exactly know what to make of it, to be honest with you. Like I said a few moments ago, they've got some pretty iconic media assets. Probably the best that I can think of off the top of my head. So that's a huge thing working in their favor, having those intangible assets. But financially, I shouldn't even say that. I was going to say I'm not loving it, but it's not terrible. I mean, the earnings is getting back up. I like this trend here. I like the trend with the free cash flow per share these last couple of years is really coming back with a vengeance. So yeah, I'll just leave it there. There's some good, there's some bad. I don't know that I'd have an interest in buying Disney at this time. But yeah, it's not. I definitely can think of worse stocks. So it's somewhere in there. I know that's kind of a wishy-washy response, but okay. And those were all of the questions saved. We actually went through those very quickly. So let me scroll back up in the chat here and see what else we got. We'll just kind of go through them one by one here. So Unused Soldier, do you have any thoughts on crypto ETFs like BITO or BITX? No, truth be told, I'm probably not the best person to ask about crypto. I don't personally own any. I guess one thing that comes to mind with those ETFs is I guess I don't really understand why you'd want to own the ETF unless those do some sort of like options or futures or anything. If there's some sort of derivatives going on there. But I don't know why you'd want to own like a Bitcoin ETF versus just owning Bitcoin outright. If it is just a fund that owns, okay, so invest through derivatives such as futures. So, yeah. No, I'm looking at the yield right now. 75.6% yield. Come on. I mean, no way. I wouldn't touch that. Sorry. I mean, a 75% yield is juicy, but I gotta say, and maybe I'm just jaded, but upon seeing that, I already know, yeah, there's got to be more to the story. There's no way you're getting a straight up 75, 76% yield. Things just don't work like that. Jonah, but Unused Soldier, thank you for the question. I appreciate it. Jonah says, are you dollar cost averaging? Or are you doing chart analysis as well? That's a good question. So I buy stocks every single week, but what I buy changes week to week, or periodically will change just depending on what seems to be the best opportunity in my portfolio at the time. So yeah, I guess I'm dollar cost averaging generally into my portfolio, but I'm not buying every stock every single week. I'm not dollar cost averaging in that regard. I am doing that in my Roth IRA. In my Roth IRA, I buy SCHD and VOO every week, no matter what's going on. But I don't take that same approach in the taxable account. So, oh, Kevin Burgess, what's up, Kevin? Good to see you, my friend. You and I have a similar opinion on options. Options have a place in some portfolios, but are much less passive than holding long shares. Yeah, and truth be told, I don't have anything against options. Like I said, I know a lot of people who do very well with options, very, very stinking well. Um, for me, it just adds. There's more risk to doing options. Obviously, you can get assigned shares that maybe you don't want to own. Like I'd have no interest in trading in doing covered calls on like Netflix or SoFi or stocks like that. I, I guess you could wheel them if you get assigned. You could just wheel those, but I just don't want to do that. I don't want to go through the trouble of doing that. And so anyway, it just adds an extra level of effort that I'm not willing to to take on. And also, it adds an element of risk as well that I'm also just not quite sure I'm that interested in. So, options can certainly do you well, but it's not something that I'm that interested in. I'll just leave it there, I guess. So that's the thing too. Like when it comes to investing, guys, there's so much gray area with this stuff. It's really not black or white. Just because I don't invest trade options doesn't mean it's bad. Just because I don't invest in Bitcoin doesn't mean that Bitcoin's bad. Just because I personally choose to invest in dividend paying stocks doesn't mean that's the only way to go about doing things. So a lot of gray area with this stuff. And I just do it in the way that resonates the most with me. And what that is, I'm kind of figuring it out as I go. So, but I'll tell you what, since I got into doing this dividend stuff, it's never steered me wrong. And I love it more and more as time goes on. So I'm also not trying to overcomplicate that aspect of it too much. So, Alex, great question. Do you drip your dividends? Also, Pat, good to see you, my friend. Just now seeing you in the chat. Do you drip your dividends or do you take the cash and buy new positions? That's what I do. I typically take the cash, take the money and run, as they say. So now as soon as I get paid a dividend, it just sits in cash in my brokerage account. And then I'll just reinvest that into whatever I'm buying for the week. Like for example, we just got paid from Starbucks today, got a nice 40-something dollar dividend from them. And I use that money to buy 2 shares of Clear Secure. So that's how I do it. Ooh, Salvatore, another good question. What is your best and worst dividend play? So I'm going to answer this in the context of what has been my highest returning position and my lowest returning position. And to do that, let's jump back over to the screen. Let's go back over here to my spreadsheet. And I mean, I've talked about this so much, I don't even need to say it, but Williams-Sonoma by and large has been my best performing position. Right now I'm up just under 200% on a total return basis. It was more. The highest I've seen it get is about 220%, and that was pretty recent. So that's been my best performer. Clear Secure, in terms of the positions I own, Clear Secure is my worst performer right now. As we can see, I'm down almost 20%. But then if we go over to my sold positions, I would say my worst performing stock of all time was 3M. In terms of dollars, though, I'm on a total return basis, I'm down more with Clear Secure right now than I ever was with 3M. But in terms of percentages, I'd seen the biggest loss on a total return basis and share price basis with 3M. So I still consider 3M to be my worst investment. Just looking at share price, I didn't do too well with AT&T or Verizon either. And, AT&T has kind of been a sneaky one. Me and Russ were talking about this somewhat recently in Harris. It's just crazy to see what's happened with AT&T's share price. And yeah, I don't know. I'm glad I sold out of it though. Like you can look at this and say, man, if you would have just held on to it, you'd be sitting pretty with AT&T right now. And that's true. But I do believe what I reinvested into has also done pretty well. Like I think I took that money from AT&T and reinvested it into Vici Properties and Enterprise Products Partners. I may be mistaken on that, but that's what I kind of remember doing. Maybe it was just straight Vici. And so far I've done pretty well with Vici. I'm up, 16.2% with this position. So Can't complain about that. Oh, Nick, this is a good question. Would you give me your thoughts on PII, which is Polaris? Used to own some Polaris quads or Polaris, whatever you want to, however you guys pronounce it. You do long A or I don't know, but I used to ride these when I was a kid, and kind of an interesting company. And they've definitely done well with their, I don't know what you call them. I've heard them called numerous things, side by sides. I've heard a lot of people call them. I think Wayne actually has one. But man, look at this! Look at this share price drop, down 50% in the last year. It looks like free cash flow has dipped into negative territory, so that's not good. Not good at all. Yeah, I got to say, I'm not too impressed with these financials. It's just too sporadic. It's too all over the place. It looks like they had a nice pop from COVID, which makes sense. You know, when everything was closed, and golf was kind of a similar thing. Once everything was shut down, people started golfing left and right. Everyone became a golfer all of a sudden. And it looks like the same is true with riding quads and side by sides or whatever. You know, people got their toys and went outside, so that certainly benefited them. But you know, it looks like things have kind of come back to reality with this company, and I'm just not that. I can't say I'm that impressed with this company's financials here, and we'll see what happens with the dividend. But I got to say, I'm a little bit concerned with this right here. This could be a potential yield trap right now, actually. I would throw this in yield trap category right now. We'll see what happens financially as time goes on. But, you know, high payout ratios, negative free cash flow. It's not looking too good for this company from what I can see. And you know what? I need to save this. I want to save that one because I put out a video last month, I think, talking about some potential, you know, dividend cutters. And Polaris has some of the qualities that could constitute that. So dividend cutters, bear with me, guys. I'm just making myself a note for a future video. Dividend cutters, PII. Thank you. Okay. I had a few others on the list too. I don't remember what they were. I think MTN, which is Vail Resorts, was on there. So I'll write that down too. Anyway, let's keep going though. Jay, what do you think of Target? I like Target. I've noticed they've seen a pretty big drop in the last month. I'll be talking about them briefly in tomorrow's video. So I like Target. I think it's a, you know, pretty steady retailer. A pretty iconic business. Yeah, I think Target's cool. It's, yeah, if I'm kind of tripping over my words now. It's a fine company. It's not one that I'm super excited about. There was a period of time where I was more excited about Target than I am now. Yeah, I can't say that I'm super excited about owning Target today. Nothing wrong with the company. There's others that I personally would rather own. And I would maybe feel differently if I look at Target and I think of it, you know, obviously it's a dividend king. It's a very steady, stalwart company. I probably would be a bit more interested in it if I didn't own some of those other types of companies already. And I also think too, you know, I'm kind of liking, I think I'd rather own Kroger or both Kroger or Walmart before I picked up any Target. And I would hold out for Costco as well before picking up Target. Nothing against Target. I just think there are better companies in the industry. Yeah, Michael, this is a good question. Ever thought about adding Google to your portfolio? Yeah, I think it's so funny because I'm kind of a contradiction when it comes to Google, because I think it's a great company. I think it's got all the makings to be a great dividend growth stock, but I don't know that I have. And obviously, it's a big part of my life, just being a YouTuber. But interestingly, at this point in time, I just don't know that I have much of an interest in owning shares of Google outright. And that could change. Like that certainly could change as time goes on. I would say that out of all of the big tech companies, that's the one that I'm probably the most interested in owning. But you know, I'm dollar cost averaging into VOO every single week, so I'm getting increasing exposure to Google every single week just from those contributions. And at least for now, that's fine enough for me. Like I said, that may change in the future, but for now, I'm just okay having exposure to it through the S&P. So, stock is. Oh, this is a good question, Shannon. Have you ever labeled a stock as a yield trap and then 5 years later changed your mind? Not that I can think of. No, not that I can think of. Sure, I'm really trying to think about this. I don't think there's been too many stocks out there that I've added that label to. AG&C is one that I've consistently called a yield trap pretty much ever since I first started talking about it. I don't know when that was, years at this point. And I still think it's a yield trap. I get a lot of pushback whenever I say that, but I look at something like AG&C, and all I've seen from that company is a history of reducing their dividends over time. They've been pretty good about it lately, but you know, the dividend per share still only seems to go in one direction, and so that's kind of why I keep it labeled as a yield trap. Others will disagree with me at this point because they've kept it steady for a period of time, which I'm happy to see. But still, I'll change my tune when I see some dividend growth from AGNC. But no, to answer your question, Shannon, I think I've been pretty, at least so far, I think I've been pretty good with my labeling of yield traps. So, yeah. And typically, like the only ones that I tend to label yield traps are ones that have a history of reducing their dividends. So, and I can't think of any that have really turned that around in a meaningful way. Ooh, Tack here says, is there a strong potential that utilities and consumer discretionary will outpace tech this year? I don't know. There's a potential, but I don't know how strong that potential is. So far, I'd say that we're off to a good start with that, but I don't know. There's so much year left, and anything could happen. It's not something I really going to spend a whole lot of time thinking about. Ooh, Kaysen, I'm still trying to dollar cost average Visa. Am I on the right track? Man, that's a tough question. I was looking at Visa earlier today, and it's now almost $100 above my average cost per share. And I've been getting some questions like this lately. You know, is it too late to buy Visa? Am I okay buying Visa at current prices, stuff like that. And if you're dollar cost averaging into it, I don't think it's the end of the world. Man, I'd love to see it get cheaper for sure. But yeah, I think if you've got a long time horizon with Visa, you'll probably be okay. But in my portfolio, it's not one that I'm adding to right now. Unfortunately, I would love to pick up some more shares of Visa. And I will say, if there's any sort of meaningful correction in the market and Visa, takes a meaningful tumble, I will be buying that stock hand over fist for sure. So, but yeah, it's a tough call. And I would say that generally, like if you're dollar cost averaging and have a long-term mindset, you're probably fine buying most companies if these companies are like the Visas or the Googles or ones that should continue to see consistent growth, at least for the foreseeable future. Because the share price will just continue to follow that financial trajectory. So I think that that's the most important thing. 8 years or so until retirement. I don't know. That makes it a bit more difficult because number one, with Visa, the starting yield is so low and the dividend growth rate's fine, 15%. But even after 8 years, 15, 30, 40, 60, I mean, that dividend, your yield on cost should double probably every 4 to 5 years, if my math is right, with like about a 15% dividend growth rate if that stays consistent. So, even after 8 years, your yield on cost is only going to be probably somewhere between 2 and 3%. So, from that perspective, From a cash flow perspective, it's tough. It's really tough to say. And from a share price, just from an appreciation perspective, because if you're not getting the cash flow that you need from that position, then and you'll need to use those funds in retirement, then you'll have no choice but to sell those shares. And whether or not that will work out in your favor is TBD. It just depends on what the market does between now and then. So, but 8 years is a decent amount of time to where I'd be surprised if you didn't at least see some gains with Visa. Um, but the general rule of thumb is the shorter the time horizon you have, the more, I guess, risk you have that you won't come out ahead. You know what I'm saying? There's, on any given day, there's a 50% chance it's going to be up or it's going to be down. And the longer the time horizon that you have, the more likely it is that you'll end up on the right side of that. You'll end up making money. So I don't know. 8 years is kind of tough if you were looking to use the cash flow from your Visa position. You'd have to buy a lot of Visa. Ooh, some great questions here. One from Trevon. And I apologize, guys. I'm about 15 minutes behind in the chat. So what stock have you been looking at that you most likely will add to in your portfolio? So right now, the big two that I'm looking at, and maybe I'll make a video about this. That'd actually be a good idea. I'll think about the title. I don't have to decide it right now, but that would be good to make a video around 3 stocks that I'm considering adding to the portfolio. Off the top of my head, I can think of 2 that I'm kind of serious about right now, and they're ones that I've been, at least one of them I've been chewing on for a long while now. Old Dominion Freight Line, ODFL. I've been heavily considering adding that to the portfolio, and just to show you guys, you know what? I'm not going to spend too much time with this because I'm spending a lot of time talking about it in tomorrow's video. But Old Dominion's down quite a bit. In the last year, it's down 20.5%. In the last month, it's down, only 3%, but it really took a tumble. Earlier this month, just 10 days ago, it was over $200 per share. So it's really come down in share price off of some news that really was nothing, turned out to be absolutely nothing. But I guess it does look like, with that said, the earnings per share is kind of starting to stagnate. It looks like the revenue is starting to stagnate a little bit as well here too. But the free cash flow does continue to grow. So I think that's good. And I'm not in a huge rush to add. I'm not in a huge rush to add any new positions right now. Old Dominion is a top contender. Another one is Wingstop. I'll be talking heavily about Wingstop tomorrow. So I won't spend much time with it right now, or any time with it right now. But off the top of my head, those are the 2 that are looking kind of interesting to me right now. Keith, this is a good question. Is there a sector that you have been wanting to dive into or add more of at the right price? What sector do you think will provide great value in the near future? I don't think that in the near future. I have no idea. And I don't really think about it that way. I don't really think about which sector is the best right now. I think you can look at certain ones like real estate investment trusts and say sector wide. That's kind of an interesting place to look because higher interest rates are having an anchor on a lot of those companies. But generally speaking, I don't think about things in terms of the entire sector. I more so think about investing on an individual company basis. And some of the sectors that I tend to stick to are ones like consumer discretionary, consumer staples. I like industrials a lot. Old Dominion's in the industrial sector. I'm becoming more fond of healthcare too because I've been learning more about it lately. So I would say that my big ones are consumer staples, discretionary. I really like REITs as well, real estate investment trusts, REITs, industrials, healthcare. Those are some of my favorite sectors that I would say, and the ones that I tend to gravitate towards. I think the industrial sector is really interesting just because within the sector there are so many different industries. You've got like Old Dominion, waste management, Snap-on, Caterpillar, Rollins. I think Robert Half is in the industrial sector, if I'm not mistaken. There's just so many different kinds of businesses in the industrial sector that even just within this one sector, there are so many different ways to diversify, and that's interesting to me. Let me see though. That was a pretty good question. That was a really good question. Trevon, I'm going to save your question too. I might answer that in an upcoming video, like maybe for the next Q&A video. That'd be good. Yeah, Fast Eddie, did Warren Buffett call me? Sure did. We were texting. Salvatore, would you do a one-on-one or would you charge? I don't really do any one-on-ones. That's something I've never done. I've been getting asked more recently if I would ever be open to I feel like I've been getting a lot of emails lately about, people asking if I do stuff like that. And I don't know if there's interest, then maybe I start doing something like that. But if I were to do it, it would be something that would be something that would be paid for. Yeah. But I don't know that I have much of an interest in doing that. And truth be told, I don't know that I have the bandwidth to take that on at this point in time. Maybe in the future though. I like the idea of doing something like that. And if there's demand for it, I would certainly be open to it. But I just don't know that I have the capability or the interest to take that on right now. But I answer all my emails. Like people reach out to me with email questions all the time. And I really try to respond to them. And same thing with this live stream, I try my best to answer as many questions as I can in this stream. So, shout out Craig. What's up, Craig? Man, thank you so much for the kind words. I really appreciate that, man. I really appreciate all of your support. And that goes out to all of you guys too. I appreciate all of your support here on the channel. So, okay. Let's keep going. I'm going to scroll down here. Oh yeah, worked for Victory Motorcycles. Nice. I didn't know they purchased the Indian brand, but I did know that they owned Victory. And I apologize, guys. I'm going to scroll down here in the chat and see if there's any last questions here, because it's about time to wrap up the stream. And there's so many, as I'm scrolling, I see so many great questions, and I apologize that I'm skipping over a lot of these guys. I hope, this is the bittersweet thing about having the stream where it's at now, because we're at a point, where we're getting a couple hundred people in the stream every week, which is so cool. And I get so many great questions, but I feel bad because I'm only one guy, and I can't answer every single one. And so I apologize if I'm leaving some of you guys hanging. It's not intentional, and I'm not trying to ignore you, but I just know if I went through every single one of these, we'd be here all night. So, let's see. Yeah, Christian, this is a good question, a good quick one. And I'm going to save this one too, because I think this would be a good one to talk about in a future video and in a newsletter. So when you retire, would you sell everything and put it into SCHD and just live your ideal life, never looking at the stock market again? I don't know. It's so tough to say at this point, because I'm only 31. I have so much life left to live. And never say never is kind of my my response to a lot of questions like this. Would you ever sell all of your stocks? Would you ever buy like a non-dividend payer? Would you ever get back into covered call ETFs? Would you ever trade options? Never say never with any of this stuff. All I know is that right now I'm just really enjoying the portfolio where it's at, and I'm seeing some great returns from it. And like I said, I'm really enjoying what I'm doing. So I don't have much of an interest at this point in time in going all in on ETFs or going all in on SCHD. But you never know. Maybe there comes a point in time in the future where the portfolio is large enough that I look at the numbers and just say, I can just kind of cruise now and just put it all in SCHD and just collect the cash flow, not have to think about it. There may come a point in time in my life where I decide that I'd rather just do that. But like I said, for now, I'm really enjoying what I'm doing. I'm really interested in looking at these businesses and thinking about these businesses. And it's been a lot of fun custom building my portfolio in the way that I have so far. So I'm going to keep doing that as long as I have an interest in doing it. And if that ever changes, it's good to know that there is another option out there, which it just, kind of makes me want to reiterate how, and I say this from quite a bit, so I apologize because I know I'm repeating myself, but man, we are so lucky to live in a day and age where investing is this accessible for everyone. Not only can you invest with as little or as much money as you want, but you can also do it completely hands off and completely automated. So it's just really cool to know that we have that option. And yeah, if things ever change down the road, then I'll certainly take advantage of that option. But for now, I'm not interested in doing that. Let's see. Did I save that question? I hope I did. Hope I screenshotted it. It was a good one. Yeah, I did. Okay. Okay. Let's see. I'm just seeing if there's any last questions, guys. Any last questions? Yeah, Pat said, me, Russ, and Kevin need to do a dividend conference. That'd be fun. That'd be awesome. We got together, I guess it was a couple months ago at this point, right? On Kevin's channel, but we're definitely due. And I think I said, I'm so sorry. I'm just now remembering this. I said that we would do it next time on my channel. And I think we were supposed to do that this month or last month sometime, but I totally dropped the ball. I would love to do that sometime soon. So remind me, guys, if you don't hear me bring this up next week, remind me next week to set something up with both of those guys, with Russ and Kevin, just to shoot the breeze on here, because it's been a while. And it's honestly slipped my mind, but I don't want it to. So yeah, remind me next week if you don't hear me bring it up. Let's see. Okay, guys. Yeah, do this too. Like Chris says, if you haven't joined the Discord yet, check it out in the description. Yeah, there's a link to it in the description. Totally free to join. And if you do join the Discord group, which is basically just one big group chat, a lot of the characters here in the live stream, a lot of you guys are already in the Discord group. But for those of you who aren't, it's really cool. Just, other investors in there talking dividend stocks and other stuff as well. 24/7. I think at this point we're at 30, we're over 3,000 members, maybe 3,200 at this point. So it's really growing. We've got a good crowd in there. And if you do join the Discord group, be sure to read the rules on the welcome page. Upon joining the group, you'll immediately be taken to the welcome page. Read the rules there, because that is going to tell you how to unlock all of the other channels. It's going to look pretty bare in there when you first join, but you have to read the rules. That will tell you how to unlock everything else. I think a lot of people miss that. And so I always want to just bring that to everyone's attention. So, Pat says we should do a live in Vegas. That would be fun. Ari is coming to town in March, I believe, at the end, sometime towards the end of March. And we talked about doing a live episode of the Deep End, and I'd like to make that happen. I just need to figure out how we're going to set that up with the tech. Maybe we just use our phone microphones or something, and then I sync it up later in post-production or something. I don't know. I'll figure it out. But that would be awesome to do a live conversation with those guys. That'd be awesome. Striper, this dividend happy hour should be a 90-minute chat. Man, I know. It always goes by so quick. So quick. But anyway, guys, I think this is a pretty good place to wrap it up. Sorry, I'm thinking about extra live streams. Man, at some point, I think I'm going to have to add a second live stream again. I did that for a while with the Walk to 100, but I'd have to do another one like this where I'm sitting down and it's not tied to working out. Oh, interesting. Okay. Dividend party in Vegas. Phil would get a plane ticket for that one. A Vegas trip. Okay. Okay, let me ask you guys this while we're on the subject. Serious serious question. Given enough notice, if it was planned well in advance, would show of hands, who would be open to traveling to Vegas for some sort of in-person event, like maybe some sort of in-person dividend happy hour where it's just like a mixer, all of us getting together, and just doing like an event like that, or it could even be like a Q&A panel. Let me know if you'd be interested in anything, something like that, and if you would seriously consider coming out here to Vegas for that. Ryan Con. No, man, we'd call it DivCon, or we would just call it like, dividend happy hour or something like that. Okay. So I see. Okay, so who do we got here? We've got unboxing, we've got Anders, we've got Stripers in, Phil's in with 2-month notice, Pat's in, Wonder Rider, that's 6, Paolo 7, Sir Dude Broman 8, Marcus. No, Marcus maybe not. It's getting so expensive now. It can be cheap. It still can be cheap, but I know exactly what you mean. Mark says Orange County. I don't think we do Orange County. I think we do Vegas, if anything. I love Orange County though. I was just in Newport last week with my wife. So I got 8. Joey says it'd have to be towards the end of the month. Okay. So realistically, we might be able to get 10 to 20 of you guys. And I know there's a few people here in Vegas already. 10 to 20. So maybe 10 to 20. We could do. Yeah, that'd be fun. If we had a group of 10 to 20, we could definitely do like a mixer type thing. If it was more than that, then maybe, yeah, I think that would. And what do you guys think? Would you rather come for like a mixer, a big hangout session, where everyone's just kind of, where it is like an in-person dividend happy hour, everyone's kind of mingling? Would you rather it be something like that, or would you rather it be something more organized where it's maybe like a panel of speakers, and then there's maybe like a Q&A component attached to that? What would you guys prefer to see? What would you prefer that type of event to be? Craig's in. Cool. Paolo, maybe in the spring. Antonio's in. Antonio, man, we'll give you a piggyback, a dedicated piggyback to carry you around, help you get around. Striper Kid says we need some heavy hitters like Kevin, Adon, and others. Adon hasn't been on the show, but yeah, I think it'd be fun. It'd be fun to do that and bring some of these guys out here. Kevin, it'd be fun to see Kevin. Man, see that hat in person. That would Kevin's Vegas vacation outfits would be legendary. I already know that. Awesome to get Russ out here. Russ is coming in October, maybe. He was here last October. We got together. Hangover panel. Okay, so you guys like the informal setting. That's good. Casual get together. Yeah. Okay. Okay. So I definitely, that'd be interesting. Evening mixer and next morning brunch. Casual get together, like a room full of friends. I think that would be more realistic, to be honest with you. Something like that. And typically, when we did this for my wedding back last April, we just rented out a section of a restaurant, great restaurant. And it was, they brought out a ton of food, brought out a ton of drinks, and we basically just had to meet the minimum budget, which was, I think for us, it was around $5K, which wasn't terrible. Um, but it was kind of like a cool mingling thing, and there was more food than we knew what to do with, more drinks than we knew what to do with. It was difficult to spend up to the minimum that we had to spend. So something like that could work. Something like that could be cool. But I think that would have to be the route. With that amount of people, you'd have to do it that way. Juan's Flamin' Fajitas for dividends. That would be so much fun. Juan's is just way too out of the way, though. It'd probably have to be somewhere on strip, I would think, or close to the strip. Ooh, when you do this, could you set up a live stream for the non-USA people? Potentially. I'd have to figure out those logistics because that might be tough depending on the internet situation, but that could potentially work. I don't know how you would if it I don't know how you would, do the audio though. If it's like a mixer, just a casual get together, I don't know that you could set up a live stream for that. Just people walking around everywhere, you know? Um, Even with like a Q&A panel, I think that the audio for that would be hard. Okay. Well, this is good to know. This is really good to know. I've always wanted to do something like this. It's kind of I feel like it's kind of a big thing to tackle. So let me, I'd really need to like flesh this out and take it seriously. Um, but that's good to know that you guys would be interested in something like that. I like the idea of um, Dividend Comic Con. Yeah. I like the idea of doing something like that where it's just a casual get together and people just hanging out, getting to know each other and having fun. Something unofficial, you know. So, and there's so many places to do that here. Cool. All right, guys. Well, give me something to think about. With that said, though, I think this is a good place to wrap it up. But thank you guys for that input. That's actually very helpful. You know, I've wanted to do something like that for a long time. Um, it's hard to know how much interest there actually is. Maybe what I need to do is set up like an email wait list or an email list for people who would actually be seriously interested in going. Um, use dividends to pay for it. No, well, that's the other thing too. While we're on the subject, if we were to plan something like this, it probably would be a paid event. Otherwise, I'd be paying for it all out of my own pocket. Um, so it probably would be a paid event, and depending on how many people would come, it would probably be, man, it might be, but I think it would be over $100 a person, probably potentially even over 200 for that. It just depends how many people we have. So, and that's the extra component to it. I just don't know how many people would be interested in paying to travel all the way here, then paying to do some sort of, some sort of sanctioned event. If there's like 10 to 20 of us though, then you can just go to a bar or something and then everyone's on their own tab or something. So that part's easy. Um, yeah, I think it really all just depends how many people. Anyway, guys, we'll keep thinking about it. Yeah, have to count cards to make it up. There you go. There you go. But anyway, guys, we're gonna wrap it up here. Matt, I see you just hopping in now, man. Good to see you. And you're hopping in there right at the end. But guys, thank you so much for the fun stream. Thank you so much for um the back and forth on this, potential in-person thing. That's good insight. I'm gonna keep thinking about it, and it would be fun to do that at some point for sure. So I think it's a matter of when, not if. Whether or not that would be this year, I just don't know. Could happen next year. We'll see. But I think step number one is probably going to be to start. I don't know. I think step number one would be to just see how much interest there is, like serious interest. So And I think that will kind of determine the rest. So anyway, guys, yeah, we're going to wrap it up here. But thank you guys again for your time. Thanks for hanging out with me. Thank you so much for all of the support. You guys all keep up the great work. We'll see what next week brings. This week was a killer week. And next week, who knows? We could see some red. And actually, on that note, last thing, I promise, last thing. What do you guys think is going to happen next week? Are we going to see some more green? You think we're going to be in for some red next week? What do you think is going to happen? What do you think the market's going to bring? Monday. Why don't we start with Monday? You think it's going to be green? You think it's going to be red? And we'll go from there. I see some red. Tax says red. What else we got? Yeah. Wonder says red. Phil says green, red. Anders says the market, the dollar is about to tank. So whatever that does, there you go. Okay. Pat says flat. A little of both. Green Monday, red Tuesday. Red is the new green. There you go. Hopefully it is red. And actually, okay. Yeah, I'm interested. We'll see what happens. I think we might be due for some more green, but your guys' guess is as good as mine. I did get this question from Michael a few minutes ago, and you guys know I can't resist a good book question. What book are you currently reading? I am reading Hooked by Nir Eyal. Nir Eyal? I don't know how to pronounce his name. By my man Nir here. I think it's a guy. I actually don't know. I'm reading this book right here. Really good. The subtitle is How to Build Habit-Forming Products. I thought that this would be a good, insightful read, because I've been building out Snapstock and, trying my hand at building this, this platform thing. And so I thought I'd get some good insight from reading this. And so far, I will say that I have. I'm probably halfway through the book at this point, actually. It's not a long read. And, I've learned some good things so far. Pretty easy book to read. I'll probably finish it next week. If not over the weekend, we'll see. But yeah, it's been a good one. And I actually just started putting my notes on the book up on the website. So if you want to check those out, head over to the websites. I'll actually show you guys. Head over to, and I don't really plug the website as much as I should. Head over to retirewithryan.com. Scroll down. You can see my book notes for it right here. And I just finished all of my book notes for Richer, Wiser, Happier not too long ago too. And there were so many memorable quotes in this book. I'm glad that I went through and reread it. And also, like I was mentioning earlier, I have all my stock research up here as well. All of my notes on the quarterly earnings calls, tons of other books. I've got shareholder letters, notes on Warren Buffett shareholder letters as well. I've been neglectful of these. I need to start going through them again. And then, I've got the newsletter on here as well. So a lot of good stuff happening over on the website. I hope you guys check it out. But man, that's my spiel. That's all I got for you. But you guys all have a great weekend. Check out the channel first thing in the morning. I'll be posting a video first thing in the morning. I'm going to finish editing it tonight. So I hope you guys check that out and enjoy it. But otherwise, I hope you all have a fantastic weekend, and I'll see you in the next one.